Time now for a look at the day's top business news. For that, we're joined by Brian Quinn. Brian, starting with the HSBC Bank defending itself against accusations that it helped China crack down on Hong Kong's pro-democracy movement.
That's right, Eve. HSBC is under fire from UK lawmakers who accuse it of, quote, aiding and abetting Chinese authorities as they've sought to quash resistance to increasingly authoritarian rule in Hong Kong. MPs say the multinational banking giant has taken a political stance on the side of Beijing, appearing to support the introduction of a sweeping new national security law that's made speaking out against mainland rule punishable by harsh prison terms. Last year, it also emerged that the bank had frozen the accounts of a prominent pro-democracy campaigner and his family. HSBC was founded in Hong Kong and has deep and long-standing ties to the former British colony. CEO Noel Quinn says his firm is now bound by Chinese law and pulling out is not an option. Here he is.
My motive is 100% about helping the people of Hong Kong recover from the challenges that they face. And I have to work within the legal framework that I am given in Hong Kong to do that. There is no benefit in me walking away or HSBC walking away from the community of Hong Kong at this point in time. I can't cherry pick what law to follow and what law not to follow. As a CEO of a financial institution.
Well, speaking of Asian financial hubs, Brian, how are the markets faring?
Asian indexes mixed in Wednesday trade as investors digest the latest outlook from the International Monetary Fund, predicting the global economy to grow by 5.5% in 2021. That's slightly faster than previously expected. The Nikkei in Tokyo is up around 0.33%. Chinese indexes treading water despite new data showing strong growth in industrial profits for both December and 2020 overall. Kospi in Seoul, though, sinking over 0.5% just ahead of the closing bell there.
Next, from competitor to cooperator, French pharmaceutical company Sanofi has agreed to work with Pfizer BioNTech to help supply those COVID-19 vaccinations.
Yes, Sanofi will now fill and pack more than 100 million doses of the Pfizer BioNTech shot. That news comes as the release of the French drug maker's own planned vaccine, developed in partnership with Britain's GlaxoSmithKline, has been delayed until late 2021. The deal with Pfizer will need EU approval. Sanofi may not be pitching in until July. Fraser Jackson has the details.
1 month ago, French pharmaceutical giant Sanofi announced a delay to its COVID-19 vaccine. Now it has teamed up with its American competitor Pfizer to increase production of their vaccine.
Alors nous allons travailler avec eux dans une usine en Allemagne qui est à proximité de BioNTech et nous ambitionnons de pouvoir produire pour eux environ 100 millions de doses d'ici la fin de l'année qui vont commencer à arriver à partir de l'été.
The partnership is set to streamline the manufacturing process by allowing Pfizer to focus on making the vaccine and Sanofi handling the bottling of the product. After recent delays in production from Pfizer and now AstraZeneca, the announcement could be music to the ears of EU countries. Approval, however, still needs to be given by the bloc's health authority, meaning nothing is likely to happen before July.
Pfizer, dans ses propres chaînes de production, a la capacité de produire le vaccin, mais n'a pas forcément la capacité de le mettre en flacon ou de terminer la production. Et Sanofi vient en relais pour pouvoir sortir davantage de doses en un minimum de temps.
Sanofi is still pushing ahead with its own COVID vaccine as well. It hopes to have it available by the end of the year.
To New York next, where the city's money managers are taking a stand on climate change.
Well, Eve, New York City officials have announced that 2 major pension funds for public employees will be divesting roughly $4 billion worth of fossil fuel assets. Mayor Bill de Blasio and Comptroller Scott Stringer announced the move Tuesday, with the boards of New York's $91.4 billion city employees retirement system and the separate $77.4 billion teachers retirement system approving the sell-off. De Blasio called it the largest fossil fuel divestment in history. Stringer says its effects will be felt for generations. Here he is.
My sincere hope that other municipalities around the country will take note and follow our lead. The divestment from fossil fuels is possible and necessary. Smart investment policy and smart climate solutions go hand in hand. And we are putting our money where our mouth is. And we're doing this for future generations, for our children and for our retirees.
And finally, for business, Brian, we were looking at this earlier in the week, but the value of a video game retailer is still making serious waves in the financial markets.
It keeps going up and up, in fact, Eva. It hasn't stopped. Shares in GameStop were up nearly 93% in official trading yesterday, and that does not take into account after-hours trading. That adds to a nearly 400% rally in recent months. Tesla entrepreneur Elon Musk now chiming in with a one-word tweet linking to the main driver of the stock's volatility. That would be the subreddit called Wall Street Bets. Now, hordes of small retail investors on the site have been pushing the stock higher, many buying potentially risky call options for GameStop shares, despite the company having lost around $1.6 billion over the past 3 years. That action is creating a dilemma for regulators as armchair analysts and online day traders are increasingly pushing big moves in the markets. And the question here is, what defines market manipulation? Can a frenzy in a meme-based online forum essentially can be market manipulation? They haven't decided yet. It's going to be a tough one.
Yeah, I guess it's tracing back to where it started from, maybe to see if there's anything untoward, but it's certainly a fascinating story. Brian Quinn with all the business news. Thanks indeed for that.